Good afternoon, good evening, good morning, wherever you are. Welcome to the Caribbean Conference on Corruption, Compliance, and Cybercrime 2021, hosted by the Caribbean Development Bank. I understand that we have over 1,000 participants from 45 countries around the world. I hope that this will be a very engaging discussion. In fact, I believe that we have left the best session for the last. And so I hope that we'll have a very productive and engaging discussion on this panel. On this panel, I'm joined by two esteemed executives from two of the largest companies operating across the region. I have Mr. Nigel Baptiste, Chairman and CEO of Republic Financial Holdings Limited, and Mr. Anthony Ali, Managing Director, Goddards Enterprises Ltd. Gentlemen, welcome.
Good afternoon.
Hi, good afternoon, Isaac. It's a pleasure to be here.
On this panel, we're going to be discussing the role of the private sector in curbing corruption, money laundering, and cybercrime. It's an interesting topic in the sense that it is loaded with three very big topics: money laundering, cybercrime, and corruption. And I know from a private sector perspective, these are not conversations that are normally skewed in the direction of the private sector. As a matter of fact, there's a vast body of literature that focuses on public sector corruption, but very little systemic analysis on the private sector. And I know that from a UN ODC report, it said that 51% of companies experience a request for a bribe every single day. And if we were to use that proxy for the region, that's a very frightening number. But that's where corruption is concerned. We are going to be discussing money laundering and cybercrime as well. Audience, you're free to submit your questions as the panelists deliberate and we have this conversation going between us. You're free to ask your questions at any time. So Anthony and Nigel, what I want to do is to begin by asking you to share some introductory remarks on the topic, and then we'll have the exchanges following that. Anthony, could I start with you?
Sure. So when you think about the three key topics of corruption, compliance, and cybercrime, we operate in a region where we have a number of small island states. We have a number of different compliance requirements that vary from state to state, which make it very, very difficult for organizations to be able to operate from an ease of doing business perspective. At the same time, it also creates a challenge in being able to monitor and control money laundering and corruption from an internal perspective within our organization, and at the same time, from a geographically dispersed, language diverse segment, it really does come down to how well you can control, and I use that word specifically, the actions of your team and your technology. And that really is how I look at it from our perspective. It's the span of control that we can influence over a large geography. Today, Goddard operates in 25 different countries, from Uruguay all the way up to Toronto. And your comment at the beginning was, every single day we get a request. Well, you're right. We get that request in multiple languages and in multiple ways. And the question is, how do you train, educate, and inform your management teams, who are the ones dealing with this, to really be able to respond and proactively mitigate those risks on behalf of the organization?
Thank you, Anthony. Nigel, any opening remarks from you?
Yeah, Isaac. So I think my opening remarks will be a little bit different to Anthony's. The topic we are gathered this afternoon to talk about is the role of the private sector with respect to those three critical areas. And I will say that the private sector is actually at the core of each of those three areas. We are integral to it. There will be no corruption, no money laundering, and no cybercrime without the private sector being involved. the private sector either involved as a facilitator or the private sector involved as the perpetrator or the private sector involved as the corrupter. So the private sector has a very critical role to play, right, in each of those three areas. And those three areas are cousins, right? And depending on the nature of the family, they could be first cousins or second cousins, right? I mean, I think Anthony has started to kind of go into some of the challenges involved in the areas. But in terms of my opening remarks, I want to say private sector, integral. Finding a solution for the role of the private sector or a way in which the private sector could manage and put boundaries around what is possible will also be key to solving, right, the challenges as we move forward. And as we get into each of the respective areas, I'll share some of my thoughts, right, on each of those areas.
Yes. Thank you very much, Nigel. I think that we are off to a great start for what promises to be a very exciting discussion. But I think your last point is a wonderful segue into the first question I'd like to pose to both of you. So as you said, money laundering, crime, and cybercrime, and corruption are cousins. But I like to say that they are interconnected, but yet distinct. And so the responses to each of them are going to be different. So my question to you, given that you have placed the private sector at the center of these three evils, if for want of a better phrase, how then do you think the private sector, what role can the private sector play in actually responding to the incidents of corruption, money laundering, and cybercrime?
So you want to tackle, Isaac, all three of them simultaneously? Even though...
Yes, I know it's a mouthful to do it.
I think we only have 1 hour.
One at a time. Let's take it one at a time.
I think we should take it one at a time. Yes, and I think if we start with the first one, okay, which is corruption, we need to start by understanding what corruption really is. And I say that because if the private sector has to address that issue, we all need to be reading from the same hymn sheet. And one of the challenges that we have in the private sector is people have their own versions of the hymn sheet, right? And some versions allow certain things and some versions don't allow certain things. And I think that is the first area that needs to be corrected. And so what am I talking about? I'm talking about identifying where the corruption takes place. And from our experience, corruption tends to rear its head, right, in two distinct areas. One is procurement, and the other is facilitation.
Right.
Okay? And really facilitation of certain types of activities. And this could be private to private procurement, private to public procurement, right? Public to public procurement, right? And likewise with respect to facilitation. So if we are talking about the role of the private sector and how the private sector could address it, Anthony mentioned it, I think briefly, or at least alluded to it, when he talked about the number of countries that certain companies operate in. And I say that's relevant because it talks to another C, which is at the bottom of all of this, which is culture, right? Culture in the different countries and culture in the different organizations. And there needs to be a zero tolerance for corruption culture, first of all, right? And we need to be very clear in our definition of what it is. So it is not okay, to receive certain types of gifts from customers who might be doing business with you. It's not okay, right, to not have a gift policy. It's not okay, right, for you to try and see how you could get to the top of any kind of a queue, through any means possible. So, those are just practical kind of things, but I would say, culture, from a private sector perspective, working on culture, and then governance, right? And governance is what will bring all of the various types of policies that you need to put in place to support the culture that you want to have. in the Republic Financial Holdings Limited Group, okay, we have established many policies that if you look and see, okay, what is at the foundation of it? At the foundation of it is an anti-corruption objective. So you actually try to save people from themselves by making it very clear what is permissible and what is not permissible. And you only get that really and truly, right, through anti-bribery and corruption policies, gift policies, procurement policies, right? You put those things in place and you reinforce them by reinforcing the culture, which comes through, having open conversations, defining what you mean very clearly. And I mean, it's not really managers. Okay, the managers are one level, but it's at every layer in the organization that this reinforcement is required. So I would say, Isaac, that in terms of the role with respect to corruption, it starts with understanding what we mean, making sure that we are all very clear, and then ensuring that we have a culture and a governance arrangement in place to support, right, what we are against.
Very, very, very well. Anthony, you have a perspective on that?
Yes, very much like Nigel. I think what's really, really important is a definition of corruption. And from my experience, what we see is that you get this statement that, well, that's the way we do business here. And I cannot tell you how many times I hear that. It's acceptable in some countries, and this goes back to the culture issue. So I agree with him on the culture. What's acceptable in one country is not acceptable here. And it's really more about how to define corruption. And again, I will say Nigel hit the nail on the head when he said there has to be a zero tolerance policy in place, because your interpretation and my interpretation, depending on what country I come from and what culture I grew up in, that may be acceptable. I'll give you an example where I worked for a company in North America that actually had a bribery policy. They had an official policy on how you could do business in certain countries, typically in Latin America and in Africa. And there was an official policy where you could do this under guidance and you had to submit the forms and everything else. But there it was. So again, this goes back to what is the culture, what is the definition, and making sure that you have the right educational processes in place to make sure that your management understands what the culture of the company is and what is and is not acceptable to the organization. And again, that goes down to all of the policies that need to be in place. How often do you train? How often do you educate? And lastly, I think one of the other things that we need to think about is how do we put in place the right ability to, within the organization, both internally and externally, to be able to report. And from that perspective, operating in 25 countries, we have an official whistleblowing policy that is both a phone, an email, obviously, people can call direct, through a third-party organization that monitors and manages this for us. But that is one of the critical things where either a vendor can come on and say, look, your company is asking me to do this, or an employee can come on and say, look, this is what we're observing. There are inappropriate activities taking place within the organization or within a contract or something going on. So again, the question is, what can you put in place to help mitigate, and how often are you training your team on that? And again, that's something that I think organizations within this region really need to get a grasp on.
Mm-hmm. Lovely. So I think both of you presented some really wonderful nuggets in terms of what could be done. And you've identified some of the areas, Nigel, you did, where fraud and corruption and how it manifests itself. But I want to ask a follow-up to both of you. Nigel, you did say that corruption, fraud takes place right within the organization. To what extent do you think sales incentives, because you're both from sales organizations, so to speak, to what extent do you think sales incentives play a role in fraud and corruption, and how do you think we can prevent it if indeed there is a correlation?
Well, I don't think having a sales incentive in and of itself, Isaac, would actually result or contribute to the corruption. And I draw, as you say, I mean, they might be interconnected, but I will still draw a little distinction between the corruption and the fraud. Okay, the sales incentive in and of itself is not the corruptor, which is where you kind of come back to the culture being very important and having governance arrangements in place. But what sales incentives can do, right, is sales incentives can make individuals a little bit more malleable, right, in pursuit of the objective, right? And that is why it is so very important that you have that culture very strongly reinforced by policies. And I mean, both Anthony and I think, are singing from the same hymn sheet with respect to that. And I'll just add one thing. And the culture is more than what you put on a piece of paper. It's more than what you print in the annual report. Okay, the culture is actually defined by the worst behavior that you tolerate. So, if in the event of the sales incentive, okay, the management is prepared to turn a blind eye. So that, for example, right, you have a situation where there's competition, there's healthy competition between the various. In our case, it'll be between the various branches and departments because everybody is pursuing their own targets. Okay, and you who are monitoring this at let's say a more global kind of a level, you're seeing trends that seem odd, and you're seeing, for example, that for some reason, in our case, most of our sales incentives would revolve around loans, So that for some reason, you are seeing a spike in loans in an area that doesn't normally have that kind of experience. Now, you could take one of two approaches. You could say, thank God, or you could say, I wonder why.
Yes.
I think if you say thank God, right, you are possibly encouraging or facilitating the behavior. If you say, I wonder why, and you go and you interrogate, and there may be a perfectly logical reason, but just saying, I wonder why, and asking the questions will ensure that at any point in time in the future, okay, should somebody ever have a thought in their mind that something maybe could be done in a certain way, right, they know that the senior management will not just be grateful, that the senior management will want to understand the source of it. A simple thing like that, I think, will contribute in a big way to ensuring that sales incentives serve a positive purpose rather than a potentially negative purpose from a corruption perspective.
I think that's a very good way to assess it, Nigel. I think as you spoke, it brought to mind this well-publicized case of Wells Fargo. And clearly, if the sort of arrangement or the line of sight that you just mentioned clearly was in place, then that situation maybe could have been mitigated. Anthony, you have any perspective on this?
No different from what Nigel said. I mean, again, sales incentives are designed to reward people for certain behaviors. And the question is, how much creativity will you allow in how that is accomplished? And again, if you make it wide open, people will step through every crack and crevice that you allow them to walk through. And they'll be as creative as your policies allow them to be. And so again, I tend to agree with Nigel. The question is, how do you limit put in place the right sorts of policies that put barriers on what kind of incentives are used, how often they're used, and what they're used for?
Lovely. There is an audience question which I'll pose to you before we move to money laundering. It says, can anti-bribery standards and policies help manage risk better in the areas mentioned by Mr. Baptiste, in particular, procurement and facilitation?
So the answer is yes. I think the anti-bribery and corruption policy, the ABC policy, is a minimum requirement. Okay? And we don't have to reinvent the wheel. with respect to those kind of policies. I think they're available. Anybody could go online and find examples of ABC policies, but they can't exist in a vacuum. They need to exist within the context of also having gift policies, because nothing is wrong with someone getting a gift, depending on how you define a gift and the limit that you put around that gift. They can't exist in the absence of a well-articulated procurement policy, so that people understand exactly the steps that need to go through. But these things, I believe, are vital, right, to bring to life what the organization wants to come to life from a corruption perspective or an anti-corruption perspective.
Mm-hmm. No, that's very good. But as you mentioned that, I think it just triggered something else in my mind. How would you make the distinction between a gift and business development? And I'm posing this to both of you, because that is where you have to draw the line most times. Is it business development, or is it a gift with some ulterior motive?
I'd like to answer the previous question first, and then I'll jump right into that one.
Fair enough.
When I first moved from Canada to the West Indies, Trinidad, and then Barbados, I had actually sent some information about practices in terms of procurement and facilitation that I thought were really interesting that we'd come across in other countries. And I think Singapore, being one of those, actually has us in the public sector, where people who are involved in procurement and awarding contracts, RFPs of a certain size, have to take a polygraph after the award of the tender to ensure that there was no bribery or corruption involved in that, in terms of awarding it to a favorite or a favored vendor, or that there was no kickback. And there are countries and there are companies that actually have these policies in place. I had suggested it, and unfortunately didn't go over very well, in that the rules and the regulations and privacy issues make that difficult. But again, I will go back and say, depending on the culture, depending on the type of organization and how frequently and the severity or the probability of these things happening, there are solutions that can be put in to answer the question that the audience had asked. There are procedures and policies and that can be put in place to mitigate a lot of these things in those particular areas. With respect to a gift, again, I define business development as an investment in your business in order to have it grow and develop. A gift to me is something that you give to an individual. So again, from my perspective, a lot of companies that I've worked with, we actually have policies on what gifts can be given. That can be the type of gift, and it's usually a monetary value, and a lot of times to whom. So as an example, if I gave a rebate to a company because I'm incentivizing them to do business with me, is that bribery? Or is that a gift? Or is that just part of the business development incentive plan? Now, if I gave that same quote unquote incentive to an individual, that becomes very questionable. If it goes back to the entity, meaning the organization itself, that's where the lines get a little bit fuzzy, and you would say, that really is business facilitation and business development. So I think there are very, very different issues there, and how I would answer that question.
Okay, thank you very much. Nigel, you wanted to come back?
Yes, I will. I think the answer is value, and the answer is practice, right? And I'll tell you what I mean by the latter. I mean, value is fairly straightforward. Really, gift means less than X dollars. Anything above X dollars is no longer a gift. And what X is equal to, I think each country could decide for itself, but it needs to be nominal in nature. Mm-hmm. It needs to be a number that you would not think anyone would be incentivized to act as a result of receiving it. In our case, in Republic Bank, it's a very low number, right? But each company, right, should have a value that it says is a distinction between gift and not a gift.
Mm-hmm.
I mean, this question about whether it's business development, etc., really and truly is a secondary question, right?
Right.
The first question is it a gift or is it not a gift, right? And a dollar value defines that. With respect to business development or some other kind of purpose, that I think is where the practice kind of comes in. It certainly is okay, right, to be given discounts and given rebates if that is, right, a norm in the industry. And I'm saying norm, and I'm being very careful with saying norm because, again, it comes back down to culture. And some people in some environment say, okay, fine, well, the norm is to be corrupt, in which case then giving this thing is okay, right? But I'm looking at more at, maybe industry at a broader sense, not necessarily even in a particular country. Because, for example, in certain software situations, if you pay early, you get a discount of 5% or 10% or whatever because people have targets. And I don't view that, right, as being corruption. So there are certain practices, okay, that will be understood, and those practices are probably okay from a business development perspective.
Okay. This aspect of the question seemed to be an audience favorite because there are a number of questions coming in, but I'm going to leave them so that we get an opportunity to discuss money laundering and cybercrime, and then if we have time, we'll come back to them in the end. So I'm posing the same question to you with respect to money laundering. How would you respond to the risk of money laundering as a private sector entity?
I mean, Tony, you want to go first?
No, you go ahead. You're in a much better position to answer that one than me.
I mean, money laundering and the risk of money laundering, I think is bread and butter for a financial institution, quite frankly. Right? We have it every day, right, to contend with. And it's quite insidious, right, because there are so many activities that fall under the ambit of quote-unquote criminal, right, or certainly not legal. And so once that money comes into the financial system, you arguably, okay, could be guilty of money laundering. Mm-hmm. In its more traditional sense, the financial institutions, we have the great responsibility of being the policemen of the financial system. Okay? The regulators, our respective correspondent banks, even internally, people like myself, we expect that all of our staff will be alert to money laundering in all of its guises. And as I said, I mean, it's bread and butter. So every day, if that statistic that you referenced, Isaac, at the beginning, which said that almost 50%, right, of companies would have received some kind of corrupt request, I would say every day, more than one time a day, okay, there's some type of money laundering activity that is taking place, right, in at least one financial institution, if not every financial institution. And the burden of being able to identify it, okay, and the consequence of not properly identifying it, right, is one that the financial system lives with, right? And it's probably something that nobody could ever sleep easy, mm-hmm, because it's a situation of you slip and you slide. So there's considerable investment that has been done, right? And this is how. So our role in money laundering, from a financial institution perspective, is that we are the facilitator. Mm-hmm. Okay, everybody is trying to get some proceeds, some illicit proceeds, into the financial system, because once they get it into the financial system and it crosses that first hurdle, then you can do what you want, basically. And so which is why everybody places the responsibility on the financial institutions, first of all, to identify, okay, who these people are, and that's where the KYC requirements come in. And the KYC requirements are extremely onerous. I mean, we were talking before the session started that many financial institutions, and the public bank would be guilty of it, right? Our legacy systems result in us putting undue burden on customers from a KYC perspective, because we can't afford to get it wrong. And the customer experience trade-off between the compliance one normally ends up in the compliance trumping any individual customer experience, because we view a failure on the compliance side as having the potential to affect all of the customers because of its implications for correspondent banking relationships, because of its implications for restrictions in types of activities that you can do. So we trade off and say, for the greater good, if the one individual kind of has to go through a little bit more inconvenience in order to safeguard everybody else who's existing in the organization. I mean, I think many financial institutions err on that side. Over time, we're hoping technology would help us, but that's at the KYC front. Then there's the monitoring of the transactions front. And there's significant investment that has been made by every financial institution to try and identify transactions which would fall under that Rubicon of either money laundering or terrorism financing. And I'll tell you, I mean, the team of individuals in this group, I don't envy them, right? Who are responsible for doing that. I mean, they have to pour through electronically generated reports. They have to pour through internal suspicious activity reports that are generated throughout the network, and they have to identify, which among all of those transactions are transactions that are a little bit dubious. And once they identify a dubious transaction, they have to go back, right, and try and almost, I don't know what the word is, retrofit, whatever it is. They have to kind of go back to that relationship from when that relationship commenced, and compile some kind of a case that would then be submitted to the authorities. And it's almost a thankless job, because you submit all of this thing here and you put it wherever, and 9 times out of 10, you get zero feedback. And that, I think, is where there could be some improvement from on the regulatory side, so that there could be some kind of feedback. But financial institutions in particular, right? Again, as I said, we are the core of it, right? We are the defenders of the financial system.
That's great. That's a great point. I know Anthony has a perspective as a user of financial services on the point you made with respect to the technology and what could be done to make it easier. Anthony, you want to weigh in?
Sure. I think there's 2 points I want to weigh in there. One is, from the financial regulatory environment and the financial institutions, I think it would be helpful if they could share data amongst themselves. So, from my experience, somebody who's perpetrating fraud does it in one location, but that is not the only place they do it. I've seen it happen in multiple locations with multiple financial institutions here in the Caribbean. So you could say that multiple institutions get stung by the same individual. And if there was a database where that data could be, or those individuals could be flagged and identified, some sort of a list or something, I think that would help institutions protect themselves. From the opposite side, and the person who's subjected to the KYC, again, understanding the legacy issues that a lot of the institutions have within the region, I think it becomes very, very cumbersome on individuals that have multiple businesses in multiple jurisdictions that have to continually fill out the same information over and over and over. It's one thing to say I'm working with a bank in Colombia, and I'm working with another bank in Ecuador and a third bank in Jamaica. But when I'm working with the same bank in all 3 locations, it is really, really difficult to understand why they can't find a way to make it easy to do business. They put that burden on me. I'm actually paying for that service. I would prefer they find a way to accept that and say, look, it's the same customer. How do I share the information amongst my 3 locations so that it's easier for them to do business? And if it happened once or it happened twice, you know what? That's not an issue. But when it repeatedly happens over and over, when you're buying companies, you're doing acquisitions, when you're divesting, when you're opening up bank accounts, and on, and you have to do this almost on a weekly basis, it becomes burdensome to the organization on the other side, not the financial institutions. So again, I would encourage the financial institutions to find some way to share that information amongst themselves and take that burden off the customer, because that's where it is right now.
But I would say, Anthony, though, there are privacy considerations with respect to sharing the information among ourselves. And it's impossible to say that a financial institution could say, I have a suspicion about Anthony, right? And then go and share that with every other financial institution. I mean, that opens up the financial institution to any amount of legal issue. I mean, what we would normally do is that we all refer to international kind of metrics. So there are Dow Jones reports, there are various reports that they would have information on every individual or every individual of note. We would share our information with the regulators in the different territories. If the regulator in the different territory reach a point in time where they were able to enforce some kind of an action against the individual, that then becomes public. Right. And that then goes on to databases that anybody can then access. But to say a financial institution has suspicions, about some individual or entity, and puts that into a domain, even if it is just with other financial institutions, that would be a bit of a tough sell for any financial institution to do.
Mm-hmm. Agreed, and so there's that whole balancing act of the individual privacy of an individual or a corporation relative to how many times does it happen before it does become a public issue. And again, we can talk about specifics, but I have seen examples where multiple organizations have been had fraud perpetrated on them. And if there was a way, and I don't mean suspicion, I mean actual fraud, if there was a way where that data could have been shared proactively, they might have been able to avoid some of it.
Okay, there are a couple of audience questions I'd like to pose to you, two gentlemen. Sure. The first one says, how often have you experienced suspicious transactions relating to high-level politically exposed persons arising from bribes and or kickbacks? It's a little granular. But
what time is it? Jokingly,
I mean,
it's frequent. I mean, and by frequent, I would say almost weekly. You come across some sort of issue at multiple levels.
Yeah, I mean, I can't be as categorical as that. I don't know. I mean, the infrastructure that we have in place, okay, is that if there were such situations, I would not know. The structure is such that the individuals who are involved in doing these investigations, where they have these suspicions, and who are involved in making the reports, at most, all somebody at my level will see the number of reports that were submitted. We get no details. So they could even submit a report on me and I will be none the wiser. So it's a difficult question to ask, to answer.
Yeah. Okay, I have a three-part question. It says, how do you evaluate your anti-corruption and anti-bribery controls? That's the first part. How is the effectiveness of the system assured? And how is the culture built, maintained, and improved? So
I think the answer really comes from feedback, right? And Anthony made reference to one of the feedback mechanisms, which is the whistleblower policies that I think is one of those policies that also have to accompany these things. When I said that how the policies can't just reside in a vacuum, right?
Correct.
A whistleblower policy will also be one of them, right? Obviously, for financial institutions, we have an internal audit process, and the internal audit process would kind of go through transactions and dig up the history of transactions and satisfy themselves, right, on the transaction. We also have an external audit process, okay, for entities to kind of external to the organization to also have a look at it. But I believe that the most effective kind of evaluation tool is the whistleblower, and people feeling empowered to be able to come back. And that feeling empowered, I think, touches the third part of your question, which is the culture, right? Because you could have a whistleblower policy for both internal and external parties to access and give anonymous feedback, okay? But the culture does not enable people or doesn't make people feel empowered. And what is the culture in that context of an anonymous whistleblower? The culture really and truly is the response or the follow-up actions that are taken when reports are received. If people have experience of making reports, or maybe even don't have experience of making reports, but people just observe, what transpires when anybody kind of says anything. And they see, okay, fine, well, somebody says anything and there's no action. Or they see that somebody says something, and they say, okay, fine, you try to convince the person that what they're saying is not correct. Those things are what drive internal cultures. What drive the external would be, somebody gets feedback from somebody else, and I've actually had that kind of a conversation, okay, in this organization with a supplier, okay, where the supplier felt that there was no point in coming and saying something, right, about something that they believed was happening inside of the organization because nobody would have taken them on, and they were actually surprised, right, that some casual comment that they made to somebody, right, actually resulted in me having a conversation with them, right? So I think that feedback mechanism, there's work that needs to be done. I mean, that part I think is a culture part, but I think it's only experience that will kind of cause people. And as I said, I mean, culture is the worst thing that you tolerate, right? So if you do nothing about something, then people believe that it's part of your culture to allow it. What was the second part of the question, Isaac?
The second part,
How effective?
how is the effectiveness of the system assured?
Okay, well, I mean, the effectiveness system is not assured. It needs to be worked. And again, as Anthony mentioned in one of his previous comments, training is important, right, for staff, okay? Reinforcing the organization's culture at any point in time, the testing and the auditing, etc. I mean, all of those things kind of try to help you, but I don't think that you can never go to bed at night and say, okay, fine, well, everything is good.
Right. I
imagine you test the system from time to time. Yes. Anthony, you have a perspective?
Yeah, I mean, so the question really is, how often can you evaluate the effectiveness of the protocols, the procedures, and everything else that you put in place? And, Nigel talked about a number of different ways to do that. I think a lot of that starts with what I call the tone at the top. What is the senior executive, and I'll be myself as an example. So we have a number of different things that we do to set the right tone and culture, and then go back and dig into the organization to really try and find out what's going on. The first one is our whistleblowing policy, which we've talked about. There are two people that get copied. Only two people see every single whistleblowing policy complaint that happens: myself and the chairman. And that's a check and balance. In case they want to report on me, the chairman gets a copy. Otherwise, I get them all. I then distribute them to the appropriate team, whether it's a finance team, an internal audit team, to an HR team, to an operational team. And I'm required by policy to report back to the governance committee and the CHRC, our human resources committee, what the report was, what actions were taken, and how it was resolved, for both internal and external whistleblowing complaints. And, I personally am monitored and tracked by my board on how quickly we resolve these things. So it's not that they can linger on for weeks and weeks and weeks. There has to be an immediate action. And our internal policy is, once the whistle is blown, the individual will get a response from me within 24 hours. And I'm also measured on that at the top of the organization. So there are reports that go to the board by the service provider that says this is how long, Anthony took to respond to these things. Mm-hmm. So the tone at the top becomes very serious in that I'm held ultimately accountable, and that then trickles down to every single person in our organization. When I assign it to somebody else to say, look, I need you to investigate this issue in Aruba, the organization knows this is serious, and the response, regardless what it is, will be reported to the board. So there's a certain level of requirement in terms of how deep they go and how far they go. Mm-hmm. The other thing that I think is extremely important is, and Nigel talked about this, is the internal and external audit. One of the things that we do is we look at the number of issues that come up during our internal and external audit, and we use that data to then go refine the next level of audit that we would do within the organization. And so we look at the frequency of things that happen, and then it helps us then target when we go in to do the next audit at the next company. How do we refine that and start searching for those particular things? And when you start to see a frequency over 15 years, you know what? This thing came up literally every single time in your internal audit. It then becomes a process that you can then educate your management team on, oh, by the way, here's a checklist. And when the auditors come, these are the things we will be identified, and these are the things we will be auditing against. And so it becomes a constant feedback loop to determine whether or not you're doing a good job. Other than that, I mean, Nigel's right. You can audit, you can test, you can educate, but at the end of the day, you will not be able to really assure how good you really are. Because, I find, again, people are always creative, and they will always find ways to circumvent any process you put in place. And I say that, but I can give you an example where we had a customer, a manager, the external security company, and our bank all involved in perpetrating a fraud. How do you catch that? When the bank is there to help you and your security company is there to help you, but they're involved in it. Mm-hmm. Okay? Unless there's a tip-off or something going on, you will never catch that fraud.
Okay. I'm going to ask another question from the audience as a segue into the cybercrime part of the discussion. The question from the audience is, how has digitalization helped the private sector's ability to protect its funds from corruption and money laundering?
Well, I mean, I don't know that digitization has kind of helped us protect the funds, but technology has, right? In terms of both being able to detect fraudulent activity, being able to detect money laundering and CTF activities, right? And also being able to recover in a much shorter time frame, right? In the event that anything has kind of slipped through, right? At the same time, I think digitization has made the risks even greater, right? Because now that you have more activities being done in a remote setting, and I'm talking about long before you had work from home kind of situation, which have only, I think, further exacerbated the risk. But once you had activities taking place in a remote setting, right, that created the opportunity for any type, right, of interception and replication, right, and virtualization that could cause a financial institution to believe that a message was coming from someone that when it was really coming from someone else. In olden times, right, if you wanted to commit a fraud on a financial institution or through a financial institution on a customer, right, you had to be able to forge a person's signature. Right? Now you don't have to be able to forge anybody's signature, right, to be able to create to perpetrate a fraud or anything along those lines, or cybercrime or anything like that. Right? All you have to really be able to do is take over that person's digital identity, which is, for want of a better way, certainly for us here, seemingly much easier to do, right, than to forge someone's signature. So I think technology has helped us in terms of being able to detect it faster, to prevent it, right, through the same kind of KYC checks and automation of certain things, right, to track activity in a much faster way, whether you're using robotics or using any other kind of one of those tools. Digitization has helped as well. I mean, it speeds up transactions. It makes it easier for you to recover, but it also makes it easier for the crime to be attempted.
Yeah. No, I would agree with that as well. In that, technology has enabled the perpetrators to be able to do a lot more and a lot faster. And to me, the challenge there is no matter what systems we put in place, what kind of firewalls, what kind of monitoring that we're doing, a lot of this comes back down to user behavior and educating your staff. What we've seen is most of the infiltrations into our systems occur by the behavior of our staff, clicking on emails, opening up things that they shouldn't open. And you have these, let's call it viruses, that can sit dormant in your system for months before they explode like a time bomb going off, and off you go. So again, the question is, how often can you educate? How do you educate? One of the things that we've done is we actually pay a company to test our employees. They send them a fake phishing email. We monitor who clicks on it. And then privately, we go back and we have a training session with them on, this is what you did, here are the implications, and next time don't do it. And we do this quietly behind the scenes. We test on a regular basis as one way to modify the behavior. And to me, that's the biggest issue, and the only way as a private organization we can mitigate that risk. As fast as we change technology and we put up different methods to prevent it, the perpetrators are finding ways to get around it.
Okay, so if we could speak specifically to the issue of cybercrime. I know in the private sector, many companies are now digitalizing a lot of the operations and getting clients to do a lot more functions for themselves. What can the private sector put in place to respond to the incidents of cybercrime?
Nigel, you want to go first, or do you want me to?
I know it's probably.
I didn't hear the question, Isaac, very clearly. What was the question?
Okay, so we're back to the original question where we wanted
cybercrime,
to see what the private sector can do to curb money
okay, all right.
corruption.
I can take up an initial shot. Sure. So, cybercrime, of the three areas that we are talking about, which is corruption, money laundering, compliance, and cybercrime. I think for most financial institutions and maybe most private sector entities, cybercrime would be in the top right-hand quadrant when it comes to risk.
Yep.
Okay. I see there's a question about where do we think the three of them are heading. I think cybercrime is heading for its own quadrant, even outside of the normal quadrant in the upper right-hand corner. Right? As the world becomes smaller and smaller, with technology is making it smaller and smaller, right? The cybercrime risk is growing and growing. And the role of the private sector in cybercrime, again, right? Perpetrator, right? Facilitator, right? And victim, right? So we play in all the roles, right? In the private sector. The financial institution probably play the last two, which is facilitator and victim, right? I mean, I hear what Anthony said about, you could probably have some one or two individuals inside of the organizations that are what, but for the most part, it's facilitator and victim. Right? And the investment in prevention, okay, is never ending. And you could, well, I don't think anybody ever gets you, but you could get a score of 99 out of 100 today, right? And tomorrow there's a cybercrime event, right, at your entity. That is how uncomfortable, okay, organizations should be. I mean, I heard Anthony talking about the employee as a point of vulnerability, and he's quite right, okay? the employees the point of vulnerability, not because they're doing it, right, but because they inadvertently, right, enabled it to occur. And clicking on phishing emails is the simplest target. What do we do, right, about it? Is constant vigilance, constant training, constant upgrading of systems, constant testing of firewalls, constant testing of the employees, as Anthony said. You know, it's unfortunate, okay, that I think that one area where financial institutions are our own worst enemy is that where we have seen some of this activity, okay, whether it be, and I'm not talking about things like ransomware or whatever, and cryptocurrencies that come in and people want payment with that for the ransomware, you know, where we have seen some of this where funds are diverted and the funds actually move from one place to somewhere, it normally moves to another financial institution.
Mm-hmm.
And normally the trick is that it moves to that financial institution and is then moved out of that financial institution before you're able to understand that an event occurred. And where I've seen it, you know, it comes back to if proper KYC checks had been done, and whoever that beneficiary, quote unquote, financial institution was, then maybe it would not have occurred. Because most times the accounts to which it is moved are accounts that are just created, right? Sole purpose to receive these funds. And you say to yourself, you know, well, if proper checks had been done on the individuals who were opening the account, maybe it might never happened. Okay, maybe, right? But from a cybercrime perspective, as I said, it's going off the charts, right? You have to be constantly aware. The investment in cybercrime prevention and or detection, right, is rivaling, right, what is required, if not exceeding, what is required for the AML and the CTF compliance. And the only difference between those two, I think, is that whereas maybe non-financial institutions don't have to worry about the AML and the CTF in terms of anything going through them, all private sector players have to worry about the cybercrime.
I would agree. I mean, I've seen cybercrime grow exponentially in the last couple of years. More specifically, you know, the impact of COVID has had a huge, had large ramifications on cybercrime as well. The sheer fact that organizations have had to shut down their offices, people are working from home, which means you now have broadened the number of people working in a digital space, gives a lot more opportunity for cybercrime to occur. You know, before you had most of your office, most of your staff, almost all of your accounts payable and accounts receivable, people handling finances all in one office, and you could contain that to a certain degree. Once you've opened up to allow people to work from home because of COVID, you now have everybody in their individual homes, all on your data systems logging in from a digital perspective, which creates opportunities for, you know, fraud, cybercrime to occur. So we see it growing exponentially. You know, one of the questions was, where do we see it growing in the future? I believe that is the single biggest risk to our organization right now. It's not money laundering, it's not corruption, it's not bribery. It is, in my opinion, cybercrime more than anything else. And again, you know, like most organizations, we take every single precaution that we can. You know, everybody has, you know, two-step verification on their phones. Every time you log on to your email every morning, you now have a two-step verification to validate that that's you, and off you go. But again, those are things that you can put in place. But the question is, the technology is changing so quickly. Our organizations, especially smaller organizations that don't have the financial wherewithal to be able to change with that how quickly things are evolving, how do they get protection? And again, I wish I had an answer for you. I know we are talking to some organizations now about using artificial intelligence to look at intercepting cybercrime based on information and logging a lot of data about where it's coming from and validating those sources and everything else. But again, I'm sure once we put that in place, it'll be the next iteration of what happens after that. And as Nigel said, the cost of doing this is going up every single year. We have to invest more and more and more in this particular area.
Okay, we have 5 more minutes to go. So given that where you see the trajectory for cybercrime, I think the next part of the question is critical. And I know both of you operate in multiple jurisdictions, but generally though, could you say what are some of the public policies that should be put in place then to mitigate against this increasing trajectory in cybercrime?
Public policies in terms of what the government can do?
Yeah.
I can't say, right? Because I don't honestly believe that there's a policy that the government can put in place. I certainly think that for more lower level cybercrime, the laws need to be updated because simple little, and I'm talking about much lower levels, right? I'm talking about lower level cybercrime that might be involving ATMs and those kind of activities, but that's a little form of cybercrime, right? Laws need to be updated so that when individuals are caught, that the full weight of the law could actually be thrown behind them. I mean, what we have seen in many of the jurisdictions that we operate in is that the crimes associated with cyber-related activities tend to fall into a more, I wouldn't say a junior kind of level, but they tend to be misdemeanors, maybe, for want of a better word, right? And so people get very, very light sentences, if anything at all. You need to throw the book at them. They need to be able to have that risk of being locked up for some period of time. And I'm talking about at least the cyber criminals in our jurisdictions need to be able to be locked up for some period of time by strengthening of the respective laws. I would say that's one, right? I think many jurisdictions do have or are developing, right, electronic transaction acts. I think those electronic transactions acts, right, also need to be strengthened. A lot of the electronic transaction acts that we have right now place all of the burden on the financial institution or the private and no responsibility on the individuals. Okay, so that you could be pushing multi-factor authentication as Anthony is referring to in terms of the 2-factor that he has in something. But if an individual kind of doesn't really see the need to do it or they're kind of slack about it, right, and something happens, there is no responsibility on their side. All the responsibility resides somewhere else. I think that sense of, I don't think it's because people don't care, right? But that sense of, carefreeness is something that could also be tightened a little bit so that people know that how, you need to take precautions. You need to protect your password. You need to protect your PIN. You need to take a 2-factor something, right? You need to have a stronger password. You need to have a this, right? And so the Electronic Transaction Act, I think, could also be strengthened. Those would be the 2 areas that sort of come to my mind, just thinking about it initially.
Anthony, any quick perspective?
I think the first one, Nigel, to me was a critical one, which is the regulatory environment and the judicial environment really do need to change and adapted to be able to deal with what we're dealing with on a regular basis. You see instances where a crime has been committed, and it could be corruption, it could be bribery, it could be cybercrime, and it takes years to get through the judicial system. And so, the penalties, is really the impetus to not do that really isn't there. And I think that's one of the areas that governments can get together and look at, better ways to deal with that particular issue in terms of how do we expedite the judicial processing to make these things more difficult or a much more of a deterrent for people to try and perpetrate crime in that way.
Thank you. So, gentlemen, Anthony, I'm going to end just where you started. You placed the private sector at the center of these 3Cs. The money laundering, the corruption, and the cybercrime. To wrap up, could you, and I mean, you basically spoke about the demand and supply aspect of it. Could you, in wrapping, speak to what private sector actors can do to reduce the supply side part of this, and any other concluding remarks you want to make at the same time? And I'm also posing that to you as well, Anthony. If you could speak to that, and then any concluding remarks you want to make, that'd be great.
Nigel, I think he was referring to you first.
Oh, okay. I thought it was...
He said Anthony twice, but he was referring to you.
Sorry. Okay.
I meant Nigel.
Sorry about that. Yeah. I mean, what can the private sector do? Actually, I'll flip it a little bit, Isaac. Right? I actually think that in order to reduce the demand side, right, in terms of people wanting to be corrupt or pushing or being corrupt or trying to corrupt, right? I think we need to make doing business easier, because it is when doing business is complicated that you leave the room, you leave that wiggle room, right, for corruption. You leave that incentive, right, for somebody to try and get something to happen a little bit easier, right, by facilitating it or by greasing the wheels a little bit. Okay, if we could, and I guess this is internally to private sector and private to public sector, if we can make doing business easier, and if we can make doing business more transparent, okay, you will, right, see a reduction, right, in the demand or supply side, whichever way you're looking at it, right? If it's applying the funds or whatever, or demanding the corrupt activity, right? And so I would say ease of doing business. To some extent, it really comes down to that.
Thank you. Anthony?
I wish it had gone first so I could say that, because it was a great answer. Look, at the end of the day, this is something organizations have to learn to live with. No matter how good we are, no matter how many processes we put in place, there is always somebody internally and externally who is going to find a way to do some sort of illicit activity. And so for me, it's really all about educating my board, educating my management team, educating my staff, and making sure that we put in place the right compliance issues, the right reporting issues to be able to, catch what we do catch. And I guarantee you, there are things that happen that we are not aware of. It's just either small enough that it gets underneath our radar scope, or it's pervasive enough that we just don't have the right technology and the right systems in there at this point in time. And so to me, it's all about, it's an evolutionary process that we have to go through. And I mentioned it, we've invested a lot in cybersecurity. We're now looking at AI and what we do next. And then the question is, once we've spent that money, what next? Because this is a journey that never ends from my perspective. We are going to have to learn to live with this in our businesses and find the right processes to put in place. And a lot of that to me goes back to where we started, which is the culture. What kind of organization are we? How do we treat our employees? How do we educate our employees? And how do we instill with them the right incentive plans to make sure that they're not involved in these things and that they are doing all the right things?
Thank you very much. To the audience, I want to really thank you for being so engaged and actively participating in this wonderful conversation. We have had two very esteemed and experienced CEOs from two of the largest companies operating in the region, clearly individuals with multi-jurisdictional experience who give us the benefit their experience on this panel. I know there are a number of takeaways, and I hope that what we heard, that we will draw from them and put them into effect in our various places of endeavor. I want to thank you, Anthony, and Nigel, also for your participation. Thank you for sharing your
Thank
own
you.
experiences with us. It was very enlightening, and I know we could have gone on for another 2 days talking about these 3Cs. But I want to thank you for whetting our appetite, and maybe there is room for you to come back again next year.
Thank you very much, and thank you to the audience as well for their involvement and participation.
Yeah, thank you as well, and same here. Thanks to the audience for listening.
Yes, and I expect to see the audience here tomorrow again. Thank you very much, everybody.
Take care.
Okay, bye-bye, everyone.
Bye-bye,
Great
everyone.
day, and continue to be safe.
Thank you.
Okay,
Me
bye-bye.
too. Bye-bye.